Eli Lilly. It is the first pharmaceutical company in history to knock on the door of a $1 trillion valuation. If you bought this stock 5 years ago, you are probably looking at your portfolio and smiling right now. But here's the problem. The stock is trading over $1,100. Everyone loves the weight loss story. Everyone loves Zepbound. But as investors, we have to ask the hard question, is the easy money already made? Are we buying a growth machine, or are we buying a bubble that is priced for absolute perfection? I'm Lynn. Today, we are stripping Eli Lilly down to the studs. I'm going to walk you through a sum of the parts valuation from AlphaPilot. We are going to calculate exactly what each part of this business is worth, from the weight loss drugs to the boring legacy stuff, to see if the current price makes any sense. The valuation shift. First, you have to understand that Eli Lilly isn't trading like a drug company anymore. It is trading like a tech stock. Normally, big pharma trades at maybe 4 to 6 times revenue. But right now, the market is valuing Lilly's Metabolic franchise, that's Mounjaro and Zepbound, at roughly 20 times revenue. That is a multiple usually reserved for high-growth SaaS platforms, or AI chips, not insulin and pills. Why? Because the growth is real. In our model, we estimate the metabolic segment alone will generate $38 billion in revenue in 2025. That is staggering. But does that justify the trillion-dollar price tag? Let's break it down. Sum of the parts breakdown. To get the real value of LLY, we need to value it as 4 separate companies. Bucket number 1, the crown jewel. Metabolic. This is the engine. Based on that $38 billion revenue estimate and an aggressive 20x multiple, this segment alone is worth $760 billion. Make no mistake, if you own LLY, you own it for this bucket. Everything else is just a side dish. Bucket number 2. Oncology and Immunology, drugs like Verzenio and Taltz. These are solid, cash-generating businesses. We value these at a standard industry multiple of 6.5x. That adds $93 billion to the total. Good, but not game-changing. Bucket number 3. The old Lilly. This is the legacy stuff. Older insulin, neuroscience drugs. Growth is flat or declining. We give this a low 3x multiple. Value? $33 billion. Bucket number 4, the moonshots. This includes the pipeline and recent acquisitions like Ventyx. This is high-risk, high-reward optionality. We've modeled this out, and it adds about $6 billion. The verdict. So, when you add the crown jewel, the specialty drugs, the legacy business, and the pipeline, then subtract the debt, what do you get? Our fundamental risk-adjusted target price comes out to $1,023.63 per share. Here is the catch. As of today, the stock is trading around $1,108. That means the market is pricing Lilly at a premium of nearly 10% above what the math supports. And remember, our math already assumes Mounjaro continues to dominate the world. The market is pricing in perfection. It is assuming no supply chain issues, no scary side effects, and that competitors like Novo Nordisk won't start a price war. Essentially, at $1,100, you are paying for all the good news up front with zero margin of safety. Actionable advice. So, what do you do with this information? If you already own LLY, hold it. The momentum is strong, and great companies often trade at a premium for a long time. It's a hold, not a sell. But if we see a spike above $1,150, it might be smart to trim a little profit. If you are looking to buy, wait. I know FOMO is real, but buying at an all-time high when the valuation is this stretched is risky. We recommend waiting for a better entry point, somewhere in the $950 to $1,025 range. A small correction or some scary headlines about drug pricing could give you that chance. Eli Lilly is an incredible company, but even the best company can be a bad investment if you pay too much. Be patient and let the price come to you. I'm Lynn. If you want more valuation deep dives like this, hit that like button and subscribe. See you in the next one.